platform streams going on. I think we are now up on YouTube, which rules. Um, and we're just going to get up on LinkedIn. I mean, like, the fun thing about the modern economy is that if you have something to say or nothing to say, you can say it on 100 different platforms all at once. Don't you think that's remarkable, Gabe?
It's really a wonderful thing, Sloane. And we really just want to put our ideas on blast at this point.
Yeah, I think that. Oh wow, here we are on the on Bookface. I'm gonna go ahead and share that to my, human story. But yeah, like so. I think really the goal at a high level for this seminar series and for really all of our touches in general with the broader public as Invest Vegan is to do what we can to add any value that we think might be broadly applicable that we get out of our perspective. And I think maybe as a starter, before we get into the slides, Gabe, you want to just introduce yourself? You're the first non-cat that anyone has seen hanging around.
Absolutely.
Uh,
Hey everyone, my name is Gabe, and I joined Invest Vegan now 4 months ago. So it's been a full technical quarter with Sloane, but I joined as her assistant. I've been doing kind of a myriad of different things, ramping up as we grow and take on more clients. But yeah, I'm really excited to be here with you all. Just a quick background on myself. I'm not going to bore you too much, but I studied economics at St. John's. Thereafter, worked for Amazon for a little while, did some fintech recruiting, and now here we are today.
you're so gentle in talking about your experience.
I hate talking about myself.
Thereafter, I worked for Amazon for a little while and did a little bit of fintech recruiting. Uh, but yeah, we're really glad to have Gabe on the team. And if you guys haven't chatted with him yet, it really is a matter of time. He is increasingly and very rapidly demonstrating himself to be super knowledgeable and useful across investment research, and the hundreds and hundreds of other different weird angles of our business, which include everything from hosting a podcast to trying to figure out how to take carbon out of the atmosphere in various ways. And that's something that we can kind of talk to in the Q&A. But I think while we're waiting for people to come in, a really good way to kind of use up some time is to just kind of give some quick kind of overview slides of kind of what we do around here. And I'm pleased to say they're kind of designy. Behold, we really went ham with the stock photos on this one. I hope you guys appreciate it. Um, Before we get into it, just a quick disclaimer: we are a Utah domiciled investment advisor. This is not a solicitation. It is also not investment advice. Investment advice is a thing that happens if and only if you have executed a contract with us, and we make specific recommendations to you. So if you're a client, and I think we've got a mix of kind of prospective clients, current clients, and people who are just kind of interested in what the vibe is around here in the chat and the stream. Just be mindful that while we are trying to give you generally useful information, we are not giving you investment advice at this time. The real highlight for today is in addition to a treasure hunt for typos in our presentation slides, which I have a tendency to kind of produce these pretty quickly and kind of roast myself in the process of delivering them. I'm just going to give a quick overview of our firm, our strategy, our performance, etc. I'm going to talk to 4 questions that we got in advance. And then in the process of kind of thinking about this, I encourage you to be asking your questions in the chat, either on Facebook, on LinkedIn, on YouTube, or here on Riverside, where you'll actually be able to kind of hit a little button and say, hi, I would like to ask a question, and then you can actually join us on the video and ask the question, which is pretty rad, and hopefully it doesn't break our computers. At a high level, what we do at Invest Vegan, we seek to invest in companies that, 1, avoid preventable harm to living things. That's my personal definition of veganism. It's one that other people have used. I think there is sort of a nice, practicality embedded in that statement. So avoiding preventable harm. That means, obviously slaughterhouses are excluded, but as we talk more about the way that we screen and think about this stuff, I think you'll see that it goes on to encompass a lot more than that. The other main criteria that we have is that every company we invest in has to make meaningful contributions to a better future for all. And what we mean by that is not like, with some sustainable investment firms, you'll see like, people who are like, oh yeah, we like to invest in women leaders or whatever, which is kind of the like, um, sort of a cursed version of progressivism. It kind of leads to people getting really excited about like more female drone pilots or something like that. What we are focused on is companies that generate impact in the same way they generate revenue. That is by selling their product, right? So I think that is one of the only defensible ways to do this, and quite frankly, I think it also gives us a huge advantage in thinking about how we manage risk as a company. Just quick overview of us. Wow, look, sweet typo number one. I didn't really update the formatting on Gabe's headshot, but isn't he handsome? I have worked in the investment business since I was a young child. Both my parents are finance industry brats. There's a post on the website that kind of has some more detail about my own personal history called How I Became an Active Manager. But what I would just stress is, on this experience thing is, for basically my whole life, I've been, angry / energized by the problem of, how to deliver an ethical investment solution to the kind of people that I think need it, right? As a trans woman, part of the catalyst for actually starting Invest Vegan was I was sitting around in a room with a bunch of my trans friends in Brooklyn, and I realized that I was the only one who owned any stocks at all. And, obviously, that has something to do with the fact that trans people don't necessarily have the best jobs usually. But I think it also has a lot to do with trust. And so I set out to build a firm that could deliver an investment solution that met my own ethical criteria, which are pretty significant and strict, and then make it available as widely as possible. So all of the strategies that we manage at Invest Vegan are available with an investment minimum of $1 or maybe 1 cent, but basically as low as practically possible. Our process really emphasizes some pretty exhaustive ethical screening. So if you go onto our website, there's a great kind of rundown of how our process works. But at a high level, our criteria on ethics takes the broad universe of about 10,000 stocks that one could invest in and narrows it down really usefully to about 1,500 companies. And that makes it possible for us. A lot of people are like, how do you cover all these companies? Well, honestly, we're able to eliminate a lot of companies from consideration, which is a really big help. And we find that, as we've kind of gone through this process over time, we've been at this for 5 years or so, there's sort of a cumulative research process that's at work here. So, every time we go back in and do our updates, we find that we're able to build on, research that's been done 3, 4, 5 months ago, more and more and more. So, I think that this foundation, though, allows us to, really kind of go and say, okay, any sort of thing that we don't want to be involved in. I think some people think that Invest Vegan is just about veganism, but really we don't invest in companies that use leather or, make eggs. But, humans are people too, or animals too, right? And, we want to make sure humans are people too. We want to make sure that we're not participating either as a client, right? We think this way, in terms of the software that we choose and the services that we work with, but also as an investor, that we're not holding any sweatshops or participating in predatory lending. One of the big differentiators, I think, between us and substantially every sustainable investment firm that I'm aware of is our approach to surveillance capitalism. In other words, the kind of marketing and resale of your information by a host of tech giants. I think that a number of firms have basically taken the view that as long as Facebook doesn't emit carbon, the fact that they've precipitated multiple genocides and arguably turned democracy upside down is not so important. We take a very dim view of that, and I think if you look at we'll get to this more in the performance later, but if you look at what underlies our portfolio, it's not just a bunch of big tech companies that in a technical way, in a narrow view of sustainability, look okay. The other thing is I think when Gabe started here, I said to him like, look, our screens are great. I think they're the best in the industry, but I guarantee you that 15% of the executives at the companies that we invest in think I shouldn't be able to shit indoors as a trans person, right? And there is an ingrained paranoia that operates at multiple levels, both from a financial underwriting standpoint and from an ethical underwriting standpoint, that we use that kind of energizes us and motivates us to expand the realm of things that we're looking at more and more and more. Our performance since Inception has been really pretty wonderful. This is our flagship ethical growth strategy since it was a baby, compared to its benchmark, which is the MSCI ACWI, which is a kind of global index of stocks. Whenever I talk about performance, I'm very quick to remind everyone that it doesn't matter. Because at a high level, what I think you and most people want from an investment firm is the ability to trust that the decisions that are made on their behalf will make sense in a future where anything might happen, right? If things go well, right, we would expect to be working with all of our clients for decades, and maybe even their families later on, right? So this is an extremely long-term partnership that we look to build and look to craft. And yes, it is nice that we have outperformed our benchmark. However, what I think matters more to you is that we've done it in a way that aligns with this very strict and rigorous ethical framework, which will allow you to trust that we will continue to adhere to that going forward, right? So again, not about performance. Performance is nice, but when I set out to invest in this way, the only way I could do it, and produce a product that was intellectually honest, was to say I don't care about performance. I'm just going to focus on building the best portfolio that I can. We think very little about the index. Basically only when we produce presentations like this one where we're explaining ourselves to other people. Little drill down on that, here's our year-to-date performance. This is we've outperformed by a pretty healthy margin. And I think I feel good about our portfolio. Happy to take any specific questions. We're going to kind of show you some of the holdings, but here's some of the nerd stats for anybody out there who is a little bit overeducated. One thing I would just sort of draw your attention to is this upside capture, downside capture measure. So far this year, we've had some really excellent stock selection going on, and not to talk too much about how good my own cooking is, but we have been fortunate when the market is going up that we've captured more than all of our benchmark's performance, and when our benchmark is going down, we've actually gone up so far this year. So hopefully we'll keep that up. But what matters more than the performance is the process that creates it, and the process that creates it will change over my dead body. We'll evolve it, we'll iterate on it, we'll continue to improve it. But to the extent there's a special sauce, it's our iterative, detailed due diligence process that we'll talk more about as we go on. Another thing I'll just kind of emphasize is that our portfolio is super, super different from the benchmark. A lot of sustainable investment portfolios will sort of focus on, how much, like trying to create, a fossil fuel free portfolio that still has the same sector weightings as the broad benchmark. These benchmarks are built by literally creating a list of, you know, the biggest companies in the world and just investing in them in roughly the same order as how big they are. You know, so though that has proven over time to be a fairly robust metric and robust way to build a portfolio, you know, I don't think that it's what you want, because in general, people who come to us are looking for a disciplined and principled ethical portfolio, right? So there are a couple things I'll just highlight. We are significantly more invested in real estate than the benchmark, something like 7 times more invested in real estate than the benchmark. And you know, the fact that we've been able to outperform the market while also being heavily invested in one of the worst performing sectors, I think speaks volumes about the rigor of our processes. You know, you can reasonably expect us to be significantly underweighted in things like energy and materials, which are, you know, typically, you know, basically extractive industries, you know, and also, you know, pretty kind of overinvested in things like industrials, which, you know, tend to have a lot to do with the energy transition, with, you know, kind of sustainable development, and with, you know, kind of broad, you know, long-lasting trends that we're really excited to participate in. Our top 10 holdings are roughly 70% of our portfolio, right? So this is a very concentrated stock portfolio. There are not that many companies that meet our ethical criteria, and of the ones that do, not that many of them are great investments. Right? So I often say that we do sustainable investing in the real world around here. You know, so the way that we kind of manage for that issue around how there just simply aren't that many companies to invest in, is we concentrate our holdings in, you know, companies that we think are doing a really great job, and that have really exciting situations. Most of our positions have also been in our portfolio since the very start, about 13 of 19 of our overall holdings. So, you know, we do tend to be an extremely low turnover portfolio, which means that, you know, there are some tax benefits for those of you that are invested in us through a non-tax deferred, like a standard brokerage account. You know, and I think that this focus on, you know, kind of owning shares of companies, participating in them as genuine owners, and really never planning to sell them, you know, allows us to weather market volatility with an incredible degree of discipline, right? We literally trade once a month on the new moon. We do not trade stock, you know, in between that. And whenever we kind of execute our trades, we make sure that we look at our entire investment universe before we trade anything. You know, so we're not only accountable, you know, to the lunar cycle, which is kind of a nice way to keep us slightly off kilter from the rest of the mainstream investment industry, but, you know, our accountability to ourselves is to update the way that we, you know, see the spectrum of opportunities every time before we touch anything. You know, so in general, that's a pretty, you know, kind of evidence-based approach to doing this sort of thing. Our fee structure, I think, is remarkable for being, you know, both simple and easy to understand. We charge 1% of assets for clients who have less than $1 million invested with us. Clients that have more than $1 million invested with us, you know, are able to, you know, kind of get a slight break. Our portfolios are also available to financial advisors to use with their clients. And we're extremely mindful that fees directly reduce investment returns. You know, so in constructing this fee structure, we've been very careful to make sure that we are, you know, kind of leaving more value on the table than we're taking in compensation. And that's part of why we've been able to outperform our benchmark, right? Because our fees are not, you know, some crazy hedge fund structure. You know, and I should have noted earlier that all of the performance figures that we shared here are net of fees, which means that they include the cost of, you know, our fee and all the commissions and all of that sort of stuff. Now it's question time. And I think it's lovely that we got so many questions in advance. I'm going to kind of walk through them in sort of the order that they were received. The first question that we got is, what's your process slash rubric for scoring companies? And this is something I could talk about until I'm blue in the face and everybody on this webinar is dead. I wrote a textbook about this with my mentor, Jason Apollo-Voss, while I was at CFA Institute, called the Investment Idea Generation Guide. That is kind of used in some MBA programs to kind of think about how to come up with investment ideas. And I also host a podcast with my homie Ashby, who teaches long-term investing at Stanford, where we talk about all sorts of different nuances of this question, right? What is your process is sort of one of those questions. It's kind of like, what is your North Star? What is your essence as a human being? And it has infinite subtlety that's important to honor. So, the first point I would say is, there's the textbook that has the, roughly 200 page or 100 page, kind of dive into, kind of how we approach thinking about, portfolio construction and scenario analysis. And then on free money, we often do really deep dives into particular nuances of this. So, for instance, we have one coming out relatively soon about how a lot of accounting techniques are based in plantation slavery and what that means for us and how we think about them. We have a piece out just recently on a really interesting cooperative farming model that's out in India. I encourage you guys to check that out. The podcast has also been accused of being kind of funny. But this is probably what the person who asked this question is asking about, right? This is our kind of rubric for what I call TIC, which is our internal metric that is designed to encompass, kind of the broad financial viability of a given company. And this is not an exhaustive list of the things that we look at, but it is a pretty good indication, mapping of, kind of what might flow into that, right? So, for instance, one of the things I think about a lot is effective governance. We like to see boards that are well composed. We like to see, non-man-children in charge of companies. A lot of our competitors are heavily invested in Tesla, which I think from a governance standpoint is pretty close to indefensible, given Elon Musk's proclivity to, I don't know, I think he was literally banned from, various elements of being a public company chairperson for a while. And yet, a lot of investors that say that they focus on environmental, social, and governance-driven investing, ESG, wind up holding his company as one of their biggest investments. We also look a lot at, does this culture work, and what's it like to be, either a person of color or, anybody, who's not the modal or majority person there. So we react extremely strongly when we see evidence of workplace discrimination, and, tend to operate on a basis where, we treat smoke like fire, so to speak. We also want to see a product that has a really solid growth trajectory, right? Like it's all good to have a great mission, but you also need a great product. And so, we like to see that a company has a nice pipeline of potential ideas and concepts and, adjacent markets that they can enter, that they're focused on KPIs which matter. One of my favorite CEOs opens every earnings call by talking about the wait times that his customers experience when calling into their 1-800 number. And he's always like, it's 1 minute and 30 seconds. We are doing everything we can to get it down. In this particular business, which is basically powered by a large group of relationships with, kind of independent organizations, that focus makes every lick of sense. We're also really interested in, is there risk of disruption? We have never owned stock in Beyond Meat, which is one of the companies that people tend to assume that we own, because I named the firm this way. We're not really looking to score arbitrary points on like some random metric or have hip stocks in our portfolio. We really want to own companies that we think have a really nice ability to not only create value for their communities and their shareholders through their direct actions, but also do it for a long time. Beyond Meat was something that though it is a really interesting thing, and I've certainly eaten plenty of it as a vegan. The what you see now is that there are plenty of plant-based substitutes that are coming out, from all sorts of different places that really are practically equivalent to those Beyond Meat kind of offerings. The other thing, and just kind of the last point on this slide, which is kind of boring visually, is that the potential for permanent capital loss is something I think about a lot, right? There are all sorts of different ways to think about risk. There's a statistical concept of risk, right? How much the portfolio wiggles around relative to the market, and whether those wiggles are based in certain things. But really, when you're thinking like an owner and investing for the long term, what matters most is managing this potential that a company you're invested in will go to zero. And so, we spend a lot of time going, okay, great. They've passed our ethical screens. Are they generating cash? Are they going to need to raise money this year? Are they able to fund stuff, properly? And what are they banking on? And what happens if that doesn't come through? I think that's another kind of distinctive feature for us, as distinct from a lot of sustainable portfolios, which are often comprised of a bunch of companies that sound like a good idea, but don't necessarily have much substance behind them in terms of like cash flow generation. Again, another look at our screening criteria. Consumer harm is another thing I'll just kind of emphasize here. There's a couple of companies that are like, hip in vegan spaces, like Celsius is one of them. That's kind of a plant-based energy beverage manufacturer, that really stresses its weight loss benefits. And particularly with anything that focuses on weight or body image, we're incredibly mindful that even though the consumer may say they're deriving a lot of value and be speaking to that with their dollars, they may not actually be helped by it, right? So we try to take a really integrated view of harm and value, right? This next question is really a fun one for me. Can we really create a better world through investment? The thing was cut off because I make bad web forms, but I think what the question asker was getting at was like, are we sort of just tap dancing on the deck of the Titanic as the whole thing goes down, or is there actually a possibility to manifest some practical impact on the broader world? And I would say absolutely yes, but we promise to do it in the most boring, imprecise, arcane, and obscure ways possible. And that's just kind of because of the structure of the asset management industry and the way that this whole thing works as a practical matter. So I created this, kind of stylized hierarchy of value propositions that our style of investing has, right? And we're going to talk about each of these, in some detail. At the baseline, though, is managing externalities, where we're thinking about, okay, as the world changes, as demand changes, as regulation changes, some companies that fail our screening criteria are basically benefiting from weird laws, weird contexts, weird realities that we don't think are durable. So like if for instance, a dairy producer no longer gets its subsidy, it's almost certainly the case that they will no longer be able to produce their product profitably. So that kind of baseline, management of externalities is one of the core value propositions that we offer, right? Because, we're thinking about and trying to anticipate those potential shifts and just avoid companies that are exposed to those issues. The next would be, aligning with growth trends. We tend to take the view that a lot of sustainable development trends are poised to accelerate. and that they are likely to be, relatively durable if we align carefully. Um, we'll talk a little bit more about that. One really big thing is stranded assets, which is, if you think about, the stock market as a whole, like, the S&P 500 or whatever, um, in that, thing that you invest in, if you buy your S&P 500 index fund, is ExxonMobil, is Chevron, is a whole bunch of, oil refineries. What happens to those oil refineries and the value of those investments in an aggressive climate transition scenario? It's likely the case that they will significantly decline in value or become valueless. By focusing on risk mitigation and due diligence, we can kind of get ahead of that, or we hope to get ahead of that a little bit. Of course, what the person who asked the question almost certainly had in mind is this concept of impact, which is things that happen in the world as a result of the way that we invest. That is one of these things that has been super oversold by the investment industry. We think we still deliver it, and I'll zoom a little bit more in on the way that we're trying to report around it later on in this thing. Managing externalities, right? Important to note that this is not a sex thing, despite the undertones of this photo, which are definitely BDSM aligned. I still included it because I think that there is a nice kind of encapsulation of the way that many executives kind of think about the risk of externalities, i.e., let's just ignore it and hopefully it won't actually happen. And the way that we queer femmes whatever think about it, where we're trying to kind of lead the industry forward a little bit. In general, if you think about stuff like I just flew out to a family reunion in Delaware over the last weekend, and to get there I flew through Fort Lauderdale on the way back, right? Because it was a much cheaper ticket. Now flying that way probably doubled the overall carbon emissions that I was associated with. There's about a megaton, not a megaton. That's a huge amount. But there's about a metric ton of carbon emissions involved in flying from Salt Lake City Airport, which is our kind of local big one, to the East Coast. And the way that airline tickets are priced now doesn't really account for that, the social cost of that carbon. And so what we hope is, not to get all economicsy, but that regulators will come in and kind of shift, the quantity of certain kind of harmful products that are sold, downwards over time as they kind of as regulation comes to reflect the social cost. And in my view, we have a role to play. This is kind of me. We have a role to play in helping the industry, the investment profession, and the companies we invest in think about these issues. Another thing, alignment with growth trends. This is a locomotive. We don't invest in locomotives. I just didn't really have a good image for it. But when you think about, like, one of our really wonderful holdings is a company called Top Build that makes and is probably I think the country's biggest distributor of insulation products. If you think about global warming, there are all sorts of things that need to happen in order to harden ourselves and prepare for the impact of that. One of them is we got to insulate some houses and buildings. And I realized this is kind of fun. I got like a little mask coming on my face from the light. But by kind of thinking really carefully about what the climate transition looks like and what we see as likely, we're able to identify some of these trends and really kind of invest in them in a big way. That I think creates straightforward value. It's a big source of our performance. But it allows us to say confidently to clients that we are an ethical growth portfolio. That's what we do. We identify ethical growth trends and align with them. And once you've found durable, well constructed, and persistent trends, that generates a lot of value in the investment equation. Um, I love the definition of stranded assets from one of the nonprofits that thinks about this. It's just so English. Assets that have suffered from unanticipated or premature write-downs, devaluations, or conversion to liabilities. In other words, stuff that's become worthless. And the part of what I think our impact will be over time will be an ability to talk about this stuff in fucking English. The like most of the kind of leading lights and sustainability tend to take this very academic tone that is quite detached from the way that clients, people, the broader world see this stuff. Really, when I think about how Invest Vegan contributes to the broader industry, the broader world over time, I think a lot about these privileges that we have. Where no one expects it. Like, I do not have to justify taking an unabashedly progressive worldview. Our clients get that, right? We also have a really strong investment process and really deep links to the professional investment community around the world. And of course, fabulous hair and a sense of humor. All of this, allows us to hope, at least, that we'll be leading the investment profession's thinking on how they adopt to this stuff, which should, in time, play into the valuations of these securities, like oil companies and whatnot, the amount of capital they have available to pursue their various plans, and kind of have a kind of a knock-on effect. And I think that because of the way that I've constructed this firm and the way that we've managed to find clients who really share our vision and values, we're able to think without encumbrance in a way that is really special. Reporting on impact is fundamentally kind of a cursed exercise. We were evaluating a software vendor a while ago that produced this, kind of impact metric thing that, includes a lot of things that I think are silly, right? Like, and you'll see this commonly from, financial advisors and investment firms, promoting some ETF that like, oh yeah, owning this thing will result in fewer fish harmed from plastic, or fewer chickens killed. I mean, and yeah, like probably fewer chickens will be killed, by the companies in our portfolio because we explicitly make sure that we don't invest in companies that kill chickens. But this is, such trivia relative to the way that these companies actually generate impact, and so indefensible from a fact based level that it's hard to view this reporting as anything but inaccurate and irresponsible. We're doing our best to talk about impact in a non-bullshit way, and probably you may have noticed that at the end of our monthly newsletters, we've been including this odds and ends section that talks a little bit about 3 of our companies and something impactful that they did recently. I think like it matters more that for instance, Armada Hoffler was able to save this historic mill and preserve it as kind of a center of economic activity in this small town, than that they didn't kill chickens in the process of doing it. Right? I mean, it would be interesting if they did kill chickens in the process of doing it, because I'm not sure what that would do for anyone. But so we're trying to expose the underlying detail in a way that's useful. And over the coming months, or later on in this webinar, any feedback that you can give, or that might be, or things that you'd like to see from us in terms of how we think around these impacts, would be really useful for us, because it's something that we really do strive to do a better job at. Another question: investment 101 tips for beginners. First thing I have to say is that saving money trumps everything else. Right. What I've got here is, the impact of outperforming the market by 1% versus the size of your portfolio. So, over here, if you have a $1 million portfolio and you outperform the market by 1%, that's worth $10,000 to you. If you have $1,000 portfolio and you outperform the market by 1%, that's worth $10 to you, right? And so, it's pretty obvious that if you are just starting out and you're, starting to build your portfolio, that what matters more is how much money what matters more than even who you invested with. And, though I think that Invest Vegan will do a better job than substantially anybody else in managing your funds, it's the most important thing is that you invest in something, and do it regularly, right? Because just identifying and honing in on that process of taking cash that you don't need and putting it into a context where it can grow is what forms the basis for compounding and what allows you to really experience the benefits of investing over time. The other thing that I would really identify is, some specific investment goals, right? And this can be a little fuzzy. Most people that I talk to who are in their 20s are like, retirement? Yeah, sure. I just don't want to die super poor. And like, it matters more that you kind of identify when the goal shows up than what it is specifically, right? So if you're thinking about buying a house in the next 5 years, that's not really money that you should put into the stock market, because the stock market can be pretty volatile in terms of returns over 5 years. But if you're able to invest for, kind of 7, 10 years or more, the kind of distribution of returns really narrows out a lot. And so, the big question that you would identify once you sort of go, how much money can I save, is what am I saving for? And when is that going to happen? And we can kind of construct portfolios for, really anywhere on the spectrum, and our kind of onboarding process, if you go in to open an account, will, kind of ask you questions that translate into a score that help us identify, whether there are short-term needs that, might be, useful for us to customize your portfolio around. But, in general, knowing what you're doing this for matters a lot. And then matching your money with your goals, right? Like if you want to buy a house in 5 years, you can start an account that's for buying a house in 5 years. If you want to create a portfolio that will basically fund your charitable giving over time, that's another thing entirely. So identifying, different things that you want to do with your money and basically putting your money into sort of buckets, or as pictured here, sacks that kind of give them a job, will allow you to think in a more granular and practical way about, what's going on and how to construct your portfolio, especially if you do it in consultation with an advisor. I'd also say don't be a sucker, right? This comes from one of our pieces on our resource center. It's really important to think critically about every step of the investment process. And it's a bright red flag whenever you're sort of asked to take something on faith. So I think that, I operate and I do due diligence in part because I just am inherently kind of cynical and skeptical, right? And I view that as almost more important than knowing how to do fancy stuff in spreadsheets. And I think in your case, whoever you are, it matters a lot that you think carefully about who you get into bed with. A lot of kind of firms have kind of left or abandoned, various like sustainability linked goals in the last couple of months. And, I got to say that anybody who was, banking on some multi-trillion-dollar asset manager to deploy like a progressive investment portfolio is a silly goose. And, don't be a silly goose. There's a lot more in terms of, kind of specific resources on our website. We're kind of always trying to build and kind of flesh out that part of our site. So you can kind of scroll to the bottom of investvegan.org and go into the detail on any of this, including, the article that I just kind of excerpted that from, which is, 5 vegan investment tips for beginners, I think, or something like that. Last question is, how is Sloane's hair always so sleek and shiny? And the obvious answer is that I come from a long line of irresponsibly hot women. This actually happens to be a group of women who lived in the very house that I am located in right now. I may have told some of you that I live in a house that my family built in Utah when Utah was still Mexico. And that's because I'm sort of an ethnic Mormon descended from various early pioneers. But the real secret is not dyeing it and using shampoo quasi regularly. I don't know. That's just how I cultivate my immaculate vibes, I suppose. Um, and then do we have any other questions from the gang and any of the chats, Gabe?
Not that I'm seeing. It might just me be getting used to the Riverside technology, but I didn't get anything pop up here. Did anything come up for you on the YouTube or
Yeah,
LinkedIn section?
I don't see anything on YouTube. I don't see anything in Riverside, which I guess means that we've answered every question that anyone has.
I guess,
Uh,
yeah. Perfect presentation.
yeah, I mean, like I strive to give exhaustive presentations that answer every question and also tell you how hot my relatives are.
I mean, that's awesome. I've never seen that picture, so that was a cool one.
Yeah, I feel like I ought to be really stressed. One of the nice Oh, thanks, Ray. Yeah, absolutely. Thanks for the kind of inspiration to think about y- how we do this and talk in more detail about it. I think um, it's one of the bigger questions that we need to contend with, and I think the industry as a whole really has a lot of work to do in finding ways that are not full of shit
Mhm.
to talk about how we do impact. And so I think that it was a great kind of opportunity to dig in on that and think about what our theories of change really are. Uh,
Mhm.
no, that's so awesome, Julia. I mean, hey, it's funny. I was an English literature major, and I think that a lot of what distinguishes us from other firms in the way that we kind of approach this stuff is that we like uh, use critical thinking and critical reasoning. So I think the investment industry as a whole has benefited in a big way from like you know basically making it seem like this is some arcane art that no one could possibly understand unless they have a PhD in physics.
Mhm.
And yeah, you're probably not gonna understand a martingale distribution and or a martingale and what it means for trading and whatnot unless you have a pretty advanced math mind. But I think I love every opportunity to sort of bust some jargon. Uh, and hopefully make this whole thing seem less intimidating, if nothing else. I think we're always available, as a resource, and I think one of the things I stress to our clients is that they cannot possibly waste our time.
Mhm.
So pretty easy to sort of book time with us on our website, and also just go ahead and open an account as well on there. So I'd encourage anybody who is kind of on the fence. I mean, obviously I have a dog in this fight. I mean, I can't say that on an impartial basis I recommend creating an Invest Vegan account. But I hope that we've kind of inspired some folks to kind of take the plunge with us, and I get really excited about the prospect of doing these sorts of things pretty regularly, and I hope that we'll be able to generate some pretty regular touches with you through this webinar series, which I hope to do every full moon.
Mhm.
And yeah, do you have any questions, Gabe?
Nothing that I could really think of. I mean, one interesting thing for me is just kind of the notion surrounding investing of how it's so inaccessible, and intimidating for a lot of folks. So yeah, I think that's really important work that we're kind of tackling on
Yeah,
one
yeah.
end of the spectrum.
Yeah, I think that I mean as a finance industry brat,
Mhm.
I kind of got to see a lot of people who are kind of famous investors um, drunk and just being humans,
Right.
and you know I think that there is like this, I mean, we in the industry benefit a lot from the perception that we're weird spreadsheet wizards whose skills could not possibly be matched by
Mhm.
others.
Mhm.
But like, another thing I'll just kind of flag around that is that you know, yes, the industry is inaccessible. Yes, the way that they talk about finance is kind of hard to understand. But it's also incredibly normative, right? So if you look at like, everyone has seen an ad for some kind of investment product in the last 7 days because the industry is an incessant advertiser. But if you think about what that looks like, um, there is a like it's so often active seniors on a sailboat or something like that. Uh, and it's like always people who are, either white or if they are kind of brown, they don't pass the paper bag test. Living out retirement in a way that, in their heterosexual, monogamous relationships. So we have a question from May in the chat. Do frameworks for social do-good companies like B Corps or other social justice frameworks factor into your investment portfolio? Do you intentionally seek them out? I'd be curious to see if their finances live up to the rigorous environmental and social aspects that go into being certified to those standards. I mean, yeah, it does play in to the way that we think about stuff. I mean, it's sort of um, you know B Corps in particular have kind of an ignominious history in the public market. You know what the most famous B Corp situation that out there is Etsy, which went public as a B Corp and then encountered some trouble financially and then transitioned from a B Corp into a regular for-profit corporation. So in general with any framework, any certification, and any external verifier, kind of no matter what that says, personnel is policy, right? So the like, well, it's nice to have. We really look for leadership that talks to impact in a way that aligns with their business in a smart and useful way. Um, B Corps, I agree, are a wonderful standard, and if we were large or profitable enough to go through the certification, we would do it as we would do it. And I think it's really nice, and consumers certainly recognize them.
Mhm.
There's a sort of growing mess of standards out there, like carbon neutral standard and whatever,
Mhm.
that can be a little bit hard to um, kind of verify as far as the kind of uh, brass tacks of it all. Um, you know, the uh, the evidence, like the academic evidence around sustainable investing, usually emphasizes that companies which have kind of rigorous environmental, social, and governance programs are able to access lower cost capital in the market. And I think there may be some truth to that. If there is, it's a relatively small amount. I think that where these frameworks for do-gooding companies really play in is around recruitment and retention. So like, how do they pay their staff? Do they pay them? Do they share the profits equitably? Do they, kind of like do what it takes to cooperate with the relevant union and keep their people happy over time? I mean, we have some investments in senior housing um, where and just demographically, it's pretty easy to see that we need more senior housing than we have because the population is aging dramatically.
Mhm.
But the what winds up separating the company that we own, Welltower, from a lot of its competitors is often that it partners with better operators, and those operators are able to hire and retain better staff.
Mhm.
So I think that the integrated view of the B Corps, the sustainability, the whatever, winds up showing up across the company in ways that can be kind of unexpected. And the better part of wisdom in thinking about how to account for and understand these standards is to think about them, not at a high level as a binary checkbox, but at in their full nuance of how they play into the company's kind of operations. Like there are plenty of tech companies that can say that they have all kinds of great standards and still, you know, sell your data to the highest bidder. And the one of the weird things about this is that every company, um, with few exceptions, has started trying to make a case that what they do is very sustainable and important. Even like, I like to use the example of Enbridge, which is probably the dirtiest oil and gas company in the world. They do, you know, extraction in the Canadian oil sands. But if you go to their website, they'll talk all about the impact they have. And so I think like the that stuff is all to the good, but it doesn't relax the need for a pretty good bullshit detector on the part of Gabe and myself.
Mhm.
Because like I mean, just how many times have we roasted a sustainability presentation when we're doing our
It's
little
like once a week,
yeah.
you know. Speaking of the bullshit detector, I'm like constantly just, sharpening mine, ready to go.
I mean, like I think that the I don't know where mine came from, but yeah, like I think that's as certainly your development as an analyst, Gabe. Like Gabe already is very good at getting to what matters in a thing, in a document or a release, which is kind of one of the biggest parts of doing this job, right? Like there's unlimited data, unlimited information that I could spend time reading,
Mhm.
and identifying what matters and what matters about it is like the whole job in a way. Um, but yeah, like figuring out who's full of shit and why uh, is the growth journey that we're on together.
Mhm. It's a wonderful one, honestly.
Yeah, I mean, I don't really have anything else to say. Do you have anything else to say, Gabe?
I think I'm good. I mean, this was fun.
Yeah. Yeah, this was really fun. I think, thank you all for your questions, Ray, Julia, and May. Awesome to have you guys participating. And please don't hesitate to use this as a resource when the heck ever you think we might be useful. Long
Yeah.
distance